What's up, everybody? Welcome to Shoulder Tap. I'm Jack, joined by the Risk Master, the manager of Aperol Spritz, Mr. Mick. How's it
Oh
going
yeah.
today? Good to see you again.
Hey, good to see you too. Good to see you too. Yeah, I was throwing those Aperol spritzes down last night. That was a great dinner. Killer steak over there and great spritzes. It was fun to
It,
see one whole end of the table lined. I started a trend. They were like bright orange drink after bright orange drink after bright orange drink.
no, it was nice. So now I got
Yeah.
my cup of White Castle coffee. It's a nice mug. I like it. I don't know when I got it.
That's 65th anniversary?
This is the
Is that
85th anniversary. That's an old fast food
85th?
restaurant.
Okay. Holy smokes.
All right.
JD
Something
Well,
was on
expensive.
JD
Something
was on
expensive.
Team Aperol Spritz last night also. Just a heads up, everyone.
you were like a girls trip going on. I loved it. Anyway,
Pinkies
this is
up.
where
Pinkies up.
pinkies up, boys. This is the part of the show where we talk about some traders to give some shout outs, some advice. Today, we're going to do it a little bit differently. We got one card to show after Mick does his shout outs. Then we'll take some questions from the audience, if you will, and kind of talk about our experience along the way with risk managers and managing risk. So, what you got for us,
Yeah,
Mick?
really happy we're changing it up today, Jack. I liked that call. I've also had a busy morning, so it was tough getting stuff together for this segment. So that was just a perfect coincidence, and I'm happy with the route we're going. As far as shout outs go, I've just got one guy in a live account with significant profits. So big shout out to Brian P. He is up $6,400 in his live account, trading the NASDAQ. Brian P., someone shared a card on him before. I strongly critiqued his trading. He's kind of, someone who's found short-term success only, big risk kind of guy, not really great with the money management. Happy he's having a good day today, but, there's a lot of daily loss limits involved in his funded level accounts. But other than that, got a bunch of people up around the $1,000 mark and a little bit north of that, but nothing really, worth rattling off. It had been a good start to the week. There's a lot of red on the board today. Not too bad, though. I mentioned yesterday the cut was a little bit deep today. Not so bad, but just, not a lot in the way of big swings. But Brian, you took the day today. Shout out to you. And with that, I want to talk about someone, Jaskarat. Let's pull up his card. One of our XFA traders. These metrics today are going through yesterday, trading activity through yesterday. I'm very happy to say that he is on the top of one of our boards today, up $7,265 in his XFA. Today's day 7 in the XFA, but I want to feature him because there's some interesting stuff here. Overall, he's, the thing I like most is he's putting up big numbers and he's not taking big losses, Jack, which is the name of the game to me, if you ask me. 83% winning days, only one winning day so far in the 7 days that he's traded. If you're someone who's critiquing the math, it's one losing day out of the 6 days that are populating this trading card. So he's new to our program, so he's been with us a while. I'm excited because we got a good trader in our midst here to join the many other good traders that we have. But let's break it down. Look at the metrics here, Jack. 83% winning day. His average winning day is $4,900. He doesn't have an average losing day. I guess his average losing day, is the one losing day of $1,300. $1,300 is his biggest loss on a 150K account. And I like that because I see a lot of people in these 150Ks, they go hit that daily loss limit. 37% winning trades. He's taken 16 trades a day, anywhere from 1 to 15 contracts, but he likes to lean heavy on the leverage, which is where we're seeing these big days from. Despite having only 37% winning trades, this guy's got a really good risk reward at 3-1, making almost, I was going to say $1,400, but it's more around $1,300 per contract while only risking $400 per contract, which, you could have a 20% win rate And Hoagland's got a really nice table if he ever brings that up. I don't know if he's used that on Topstep TV, but it's worth him bringing up and showing the kind of spreadsheet around. Okay, if your win rate's only 20%, you have to have a risk reward of this to be profitable, and it should be really eye opening to a lot of people. I liked it when he first created that and showed it. So risk reward's great for someone who doesn't have high winning trade percentages. The risk reward is a savior. If you can have that in high risk reward percentage, if you can have high winning percentages and good risk reward, you're going to be in really good shape. But this trade report stood out to me for that risk reward, but also for I really like the hold times, Jack.
Yeah.
You can see, while there aren't a lot of losing days, 63% of the trades are losing trades. Look at the hold times on these losing trades. I've never seen such a discrepancy between hold times on winners and hold times on losers. And anybody that's been so good about being patient with their winners and impatient with their losers. 17-minute hold times on these winning trades, 2% hold time, 2-minute hold times on the losing trades. They are cutting their losing trades in 2 minutes or less on average, where they're holding their winning trades for 17 minutes. I love it. This is someone who's very methodical. For the short period of time that they've been in our program, I looked at their old accounts too, like the trading combines and the XFAs. They grind it out in the trading combines. They are not someone who's looking to hit the profit target in 2 or 3 days. They're really like trading their strategy. Now, they've been in XFAs before. I've seen some quick-lived XFAs in the past here from Jaskarat, where daily loss limit on day one and then lose the next 1,500 on day two. It seems to me that in this XFA, Jack, they've made some adjustments based off their learnings and failures in the past, and that's what trading's all about. We always have to be aiming to get better and reflecting on what we're doing. I'm seeing that here in this trade report for this XFA, and I really like it. So, as far as someone I wanted to feature, this is a guy who we want to see a little bit more trading activity out of them. I mean, again, wildly profitable, but we at the risk team, when it comes to calling people up from XFA to live, there's a lot more to unpack than just profitability, because we have to consider, are you going to be able to do this? Are you going to be able to continue doing this in live? Are you someone who's going to, have a healthy account balance maintenance level? Can we maintain discipline on, what we're risking on a daily basis, or do we fall into bad habits? Right now, that's not what I'm seeing, but a little more data always helps you, have a more confident decision. So that's where we're at with him. But overall, this is a big shout out. He's doing good stuff. We like what we see, and they got a good feel for the markets, Jack.
This is a very interesting card. If you see, Robert just shared the win rate ratio, but just I'll say it out loud here. At around, let's say you have a 35% win rate, your reward to risk ratio just has to be 1.86 to 1. That's why we always talk about how like 2 to 1 and 50% is where like Hogue, for instance, tries to be. What's interesting about this card is with the 16 trades per day, at first I was thinking, well, this much must be someone who is scaling in and scaling out. Because correct me if I'm wrong, Mick, but I would think that like, say you scaled into a 15 lot trade, putting 1 lots at each tick, and then got out
Mm-hmm.
doing 1 lots at each tick, that would count as 16 trades, right? Or 15 trades.
Yeah. Yeah.
Yeah. But then I saw what his winning trade percentage is and his hold times, and that to me does not seem indicative of somebody who's scaling too much like that. Usually you see like longer hold times on both ends of that. This person must either be a breakout trader, I would guess, or somebody that is trading ranges with a very tight stop where they're basically getting out as soon as the trade is invalidated.
Mm-hmm.
But usually, when you see someone with the 37% winning trade percentage, it's more of a Dakota type thing where you don't see 16 trades in a day. I guess what I'm trying to say here is that overall, this is very impressive stuff. And I think that these must be different trades because if you have a 37% winning trade percentage, to only be losing 1 day out of six, you got to be letting those strategies play out. So very impressive card all around.
Yeah, they certainly are. This was good stuff. I think I picked a nice shining star here. So keep it up in the XFA, Jaskarot, and we really like it. We'll see if we get you up to the live account.
All right. Well, Mick, we were out last night talking, and
Yeah.
maybe we'll open it up a little bit. If you have anything you'd like us to answer in the comments, we'll try our best. In the meantime, we can kind of talk about, in case we haven't explained it in a while, why this segment is called Shoulder Tap. Because when you're at a prop firm, let me tell you about the prop firm experience. It's a lot of mostly dudes sitting around wearing headphones, kind of like I have on now, in front of computers, talking sometimes, but usually it's quiet and just a bunch of guys and a few gals watching a bunch of screens with headphones on. Now, at every place that I'm familiar with, you do have a loss limit on the daily sense. You have position limits, you have loss limits, and there's a risk manager at the firm, kind of like Mick, but
Hmm.
you're actually in the same office. And what happens is, as you're approaching that loss limit, or maybe you're a little bit through it, they don't, sometimes don't force liquidate the positions. You have your headphones on. The risk manager comes out and kind of hovers behind you. And if you don't sense him or turn around, you get the little tap on your shoulder, and everyone around you knows exactly what's happening there. Where usually the first time it's when you're coming close to it, and it's a tap on the shoulder to be like, "Hey, what's going on here, Jack? Not looking good. Maybe you want to trim a little bit of this, especially if you're, you have a bunch of size on that's been increasing. So you're definitely going to blow through that loss limit trying to liquidate it. And if they have to come a second time, it's more get the f out of this now, go home.
Verbatim, verbatim. It's always the first question is what's going on, and
Yeah,
then if they come around a second time, it's GTFO.
exactly.
I've seen it.
Take
Never had
Yeah,
that happen to me. I've had someone ask me what's going on. Um, I've heard a number of people get the GTFO right now,
yeah,
and they won't. Oh, just wait a little bit. I think this, I think that. No, do it or I'm going to do it for you.
yeah. And if you're
Very
trading
clear cut.
flies or like positions where you have a lot on, when you should be getting out is kind of before your loss limit because you would always. I don't think a single time in my career was I, hovering around my loss limit with size and everything worked out. It's like, no, they're always going to push you to the maximum pain there.
Well, yeah, and the thing about that too is, depending on what kind of size and what market you might be carrying, like it might take you a little to unwind a position too. It's not like, oh, I've got my 20 lot on in the S&Ps, or even if you had 100 lot on in the S&Ps, like boom, you could hit the market, you're out at the next best price, give up a
Yeah.
tick.
I
But when
see.
you have amassed larger positions and there's liquidity concerns there, yeah, it's an
I
unwinding
s-
thing.
yeah, I see Ben Johnson in the chat talking about remembering those days of Breakwater. Yeah, that's what it was like. Actually, I traded in a group with a few guys from Breakwater, Ben. So maybe
Uh,
I'll bring them on the show someday. Um, so Mick, someone asked here, we got a few good questions here. Does past
Great.
performance in other XFAs, presumably blown accounts, affect your ability to become a live funded trader in the future? Or is it solely based on your current traded XFA?
It's not solely based on your current traded XFA. I mean, that's where we're centering our focus around. But we look at everything. We look at history. I was talking about it with Joskarat, the first card that we pulled up. Like I commented on live TV about looking at some of his old XFAs, and is he going to be repeating the same? We got a
So
little background
one of
audio
them
interference.
50 cent or $50 up and
What
down
is
kills
going
it.
on here?
Now I know that wouldn't be
I'm hearing a
exactly.
conversation somewhere.
You got it, JD?
All good. I found it.
Good to know. What was that? If you can guess it, let us know. Okay, go ahead, Mick. You were saying. And now,
Test.
okay.
Jack, I can hear you.
Yes, I can hear you now too. I think we were all muted for a second. I think that $5 goes to the
Yeah, I'll cover
spirits.
that one.
Okay,
Don't
there
worry.
you
Okay.
go.
Well,
We're
we
all
got
even.
some of the production guys in here today working out of the office, and they're picking up pizza for me. I've been in meetings all morning, and I told them I didn't have any time to grab lunch with them while they were in town, so they're grabbing the pie. Okay, where were we? Yes, someone asked about whether or not we look at past performance. We do, but it's not as heavily weighted as the current performance. But I mean, to get the most informed opinion, we need to look at the most data, and there's a story for every trader that we're looking at, and that's their past performance in the account. So we look at bad habits, and we are concerned about bad habits rearing themselves back up. So yeah, it plays a factor.
Yeah, I saw someone else ask a good question that JD, since you're here, you can ask during group coaching. It was about what do you think that the ideal reward to risk ratio and winning percentages, and Hogue would have a good answer for that. But I can already out preview it that it completely depends on what your strategy is.
Mhm.
I will say that I am more confident in someone's ability to succeed when their risk reward is the part of the equation that is, 3 to 1, 4 to 1, and their winning trade percentage is lower. Um, if I see someone like that last card with a 37%, and granted, it's only been 7 days, so there'll need to be more
Mhm.
time. Um, to me, that feels like a more durable strategy than when we see someone who has like an 85% winning percentage and like a 1 to point 0.5 reward to risk ratio. Um,
I agree with you
yeah,
on
go
all
ahead, Mick.
counts. If I could speak my 2 cents there, I mean, I think, I look at that in a few different ways. I'm absolutely with you on 3 to 1 or 4 to 1, Jack. Usually the
Hmm.
people that are 3 to 1 or 4 to 1, they're taking fewer trades a day, which means they're very selective. They don't have to have as high of a win rate, but if you see that and you see a high win rate, lets me know that there's a strategy that they're meticulously following and not, throwing stuff at the wall to see if it sticks. The people that have high winning trade percentages and are trading on short time frames tells me that they're trying to predict a lot of the market ups and downs and the price bar overlaps on the candles, and that's really hard to do. Scalping, it's I'm not talking scalping there, but scalping is that's trying to ice skate uphill. A lot of people say they like looking at the price action and short-term trades and stuff. I don't see long-term success doing that. I always say I like people that catch a piece of the trend for the day. So think about risk reward, hold times, number of trades per day. I can't emphasize enough the hold times and the patience spent in winning trades and the impatience spent in losing trades. It's really a big factor that a lot of people think about.
Yeah. Real quick, somebody asked, and this is my opinion, but I happen to think it's true. Somebody asked, um, and I have my answer: is 40 trades a day too many? And I would say very probably.
Yeah,
Um,
100%.
I'm of the opinion that the more you trade, like if you take 40 trades, presumably, did you have 40 good setups? Were there 10 that were better? It seems to me like you have maybe attention deficit disorder if you're trading that much or some compulsive behaviors. But really, the biggest reason is you trade that much, you are entering into the realm where algos and computerized systems better are going to eat you alive.
Yeah, I
Um,
mean, I agree. 40 trades per day depends on the time frame that you're trading on, but the lower the time frame, the lower the success rate, in my opinion. If you look at a 15-minute chart, and let's say you have a trend up day, like how many pullbacks do you get on a 15-minute chart or 5-minute chart, whatever. 40 trades per day that's a lot. I don't see 40. Now, I'm not much of a day trader anymore, but I don't see 40 trade opportunities a day. You got to be right a lot if you're work in the long and short side of the market 40 times.
Right. It's like you need
Now,
a fidget spinner or something is what you really need at that point.
yeah. Now, going back to something different. Now we hear, as speculators at Topstep, most people are, market takers. They're looking for, catching a directional move and, make an X amount of ticks. As a market maker in the past, myself, I mean, I'd love to, put 1,000 trades on a day, because I'm looking to make one tick on
Mhm.
every, trade. So the more turns or round turns I can do, buying it at 3 and selling it at 3.25, the more I can do, the more I can make. But we're not market making here, so it's a whole different ball game, really.
This is a good clarifying question, and we'll answer. There's some that we can answer later or in a different episode, but I thought this is an interesting one. Someone asked if a trader scales in with 3 contracts and scales out, shouldn't that be one trade? And the answer is yes. But I can say, even from when I was trading, the idea of what a trade in is impossible to know without intent, right?
Mhm.
So all we can look at for trades is you filled an order, you got out of the order, right? Um, if you're keeping track of your own stats, you're journaling, then yes, I think it is valuable for you to take that as one trade and think about that.
Mhm.
Um, yeah. Well, we're coming up on time. I'm trying to see if there's anything else real quick. In the
I wish
dashboard,
we
it
do
will
these
count as
more.
three
I
trades.
like these questions. We get some good questions here, and we
We'll
haven't
keep it
done the
going.
Ask a Risk Manager or anything in months. So,
Let's just do it
um,
the rest of the week. Let's just do one card. I think I'm mostly on with you.
okay,
Um,
let's do it. I think Ben's on tomorrow, but I'll be back Friday.
Yeah. One very quick question before we leave. Mick, can you trade micros opposite minis in the same account?
Yeah, you can. I mean, that's essentially like lowering your position. If I go long one S&P and I sell 5 micro S&Ps, then I have half of a one lot on. And in that scenario, I would just probably just put the 5 micros on to come out with the same,
I agree with you.
exposure.
Yeah, I agree with you because they're not completely fungible. So if you scale out that way, you're eventually going to end up with a position of like one mini and 10 micros. And then I think you're just introducing slippage into it. And I understand the commissions would be higher by just trading micros, but
Sure.
yeah, if you're only trading that sort of size, I think you got to be careful about the slippage getting out. So we'll keep doing this, Mick.
Yeah.
We're almost up on time. We got to get the group
Okay.
coaching.
Sounds good.
But
This was fun.
yeah,
Thanks, Jack.
I'm having a great time, and it's good to see you. Let's hit the links sometime. Have a few Aperol spritzeroos. Stick around because coming up next, we have group coaching with Dolby and David Green. So we'll get them on here. See you right after the break.